Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power, our resident Bitcoin mining stock analyst, and I have a jam-packed agenda for you. We're going to be kicking it off with TeraWulf, so we want to hear from the Wulf pack in the comment section below. They just came out with March production results. We're going to walk through that, analyze in today's discussion, and on top of that, they came out with their inaugural corporate social responsibility report. This is a big deal, especially in the Bitcoin mining industry, which oftentimes has been the recipient of a lot of criticism towards energy consumption and the impact on the environment. So we wanted to go through that. In addition, you guys, we've got CFO replacements at Soluna and SATO Technologies as companies start to jockey and build out their rosters heading into this month's halving. So we wanted to go through those leadership changes as well. Before we get into all that though, please take a second, hit the like button, you guys. It's 100% free to do. Anthony loves it. Please hit the like button. If you're not subscribed to the channel, McNallie Money, feel free to join. We just crossed 43,000 subscribers. We'd love to have you as part of the community. And finally, leave a comment in the section below. Wolfpack, I'm talking to you. What did you think about March production results and the launch of this new report? And on top of that, you guys, if you're holding any of the other miners we cover on the channel, let us know your thoughts in the comment section below, heading into halving in only a couple of weeks. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got an action-packed agenda for you. We wanted to kick things off with our good friends over at TeraWulf. We had Paul Prager on the program a couple of weeks ago. This was one of our most popular and probably contentious interviews we've done on the channel, Anthony. I know there was some shots being fired in terms of the HODL strategy. Now, TeraWulf has come out with March production. Very impressive numbers in my opinion. Putting up just about 400 Bitcoin. They're about half the exahash as CleanSpark. So in the right ballpark in terms of production. We're going to talk about that. Then we want to talk about their inaugural corporate social responsibility report. Now, this is a sustainability ESG focused report. There's a lot of controversy in the space, in the comments on our channel about the ESG concept, but there's definitely some value here, Anthony, especially in an industry like Bitcoin mining that's really taken a lot of heat over the last few years for its impact on energy consumption and the environment. So we want to get into that. And then finally, we've got some leadership changes as companies are starting to jockey for position going into halving this month. So a lot going on here, Anthony. The other thing I wanted to mention, we're getting a ton of positive feedback on our new background, so that's great. We just got to keep Anthony off the G there. He keeps kind of coming on the mining, and I'm not sure how my hair looks with this new virtual background, Anthony. So that's how I'm feeling today. Bitcoin not moving too much. We're over 66,000, so that's kind of the intro. And how are you feeling today, Anthony?
Yeah, feeling good. It's Bitcoin, like you say, over 66,000. So people were quoting it might go down lower, but I'm happy it stays at that level. Anything at that level going into the halving is going to be great for mining companies, and we'll talk about that as we talk through the TeraWulf update and what it meant to them in March.
Yeah, no kidding, especially when we look at that report modeling the halving with a $40,000 Bitcoin price. We've talked about that a few times. Now anything north of 60, 65, 70 is looking very good. So why don't we start off with the Wulf production report, Anthony? Very strong numbers from what I saw. What were you feeling in terms of what Wulf was able to put up in the last month of Q1 here?
Yeah, I mean, it was a good update and had everything in there that we were hoping for. So they've broken down their production. So at the Lake Mariner site, which is the larger of the two sites, they produced 290 Bitcoin. And at the Nautilus site, where they're achieving probably the lowest rate of energy cost of all the North American public listed miners, they produced another 89 there. So a total of 379. They benefited by selling their Bitcoin during the month of March and achieved about 25.5 million. And when you compare that to what they did in February, that's a significant increase. They're just under 18 million in February. So this Bitcoin positioning for them was really, really effective. And it was a good update. They've achieved 8 exahash in terms of hash rate, so that's the magic number there. And we had an update from IREN yesterday. They've achieved 8 exahash. There's a little bit of competition on who's going to get to that 10 first. They're both planning to get to 10 at the same time, but they've achieved 8 exahash in March, and they had an average hash rate for the month of 7.6. So really positive update. Other thing to mention about TeraWulf is the cost of their energy, and we've seen some other miners who highlight their monthly energy costs, and I think IREN highlighted theirs, and I think the last few months it was going from 15 to 18, I think to 20 at the last count. TeraWulf are mining a Bitcoin at just under 14,000 in energy cost per coin, so that's 13,798. That's a really low cost. We've just articulated where the Bitcoin price is today. That's a fantastic gross margin. That's in the 70% gross margin rate there. So absolutely, a good positioning as we go into the halving, because we know, obviously, the rewards coming out post the 19th of April are going to be half of what they are as today's date. The other good part about it was they've also replaced some of their older generation miners, so with the latest S19K Pro miners. So these miners, I think they have 120 terahash and a good efficiency rate there, so that they'll be good replacements. And we've seen a lot of miners do that in the last month or so. They're positioning themselves for the halving, getting the most efficient machines in place, renewing machines, adding machines. And TeraWulf have highlighted that they're going to add an additional 3,000 of these miners, and they expect them to be energized at the Lake Mariner facility, where again, some will be deployed and replace the older generation miners in the fleet there. So, really positive update. And as I say, the plan is to get to 10 exahash by mid-2024. So, 3 months away, 2 exahash to go. I think they're on target to get there.
I do too. TeraWulf is one that I really like, Anthony. The more I learn about this company, their strategy, the leadership team, their philosophy and outlook, the more I really do agree with what Paul and team have tried to do there. And when you start to look at these numbers, you quoted $25 million top line revenue in the month of March. Now, keep in mind, you guys, that's the last full month of mining before halving. But when you start to annualize those numbers, Anthony, you're looking at almost $300 million on an annualized basis. If you're looking at a 50, 60, 70% margin, you throw a 10 or a 20 PE estimate on there, you can start to get some pretty sizable market caps for these companies. Now, a lot of them are really trying to mitigate the halving by increasing their overall capacity and hash rate. And most of the CEOs we've talked to, they forecast that they're going to be exiting 2024 with a higher monthly production than they have right now. So we'll see how halving does impact in actuality here. But I think a lot of these companies are going to be positioned very well in 2024. Now, the other thing that positions TeraWulf quite nicely, in my opinion, is the launch of this ESG-focused corporate social responsibility report. Now, Anthony, I've had CEOs on the channel, obviously, for the past few years. We've talked about ESG. There's been mixed reviews in the comment section. Some people view this more as a kind of a fluffy buffer to these companies. Some people view this as a core pillar or strategic point for these organizations. I'm based here in Calgary, Alberta, Canada. So this is the hub of oil and gas. And I can tell you, Anthony, these type of reports go a long way towards building credibility with the investment bank community, the big hedge funds, the pension plans. These kind of bigwig investors, they need these type of ESG reports in order to validate and verify the industries that they're investing in. So TeraWulf, obviously, with their connection to the nuclear power, they have 95% zero carbon energy in these Bitcoin that they're mining. Not to mention a long list. It's a 35-page report, Anthony, so I would encourage you guys to go in. But talking about their environmental awareness, the policies, measuring the impact of their carbon emissions and footprint in the areas that they serve. And what's so important about this, in my opinion, for the Bitcoin community is this is an industry that's been critiqued and criticized for years in terms of energy consumption, in terms of the amount of CO2 or emissions that they put off. You always compare them to various different countries in Europe there, Anthony, in terms of the amount of energy that they use. So I think this is a great step for TeraWulf and really secures their spot in the limelight or in the view of a lot of these investment banks. What's your thought on all that?
Yeah, I mean, I'm UK based, I'm an accountant, and so, doing these reports has been sort of like, fairly mandatory for companies to provide as part of their corporate governance for many years now. And so, it's great that, you've highlighted, the fact that their facilities are powered by 95% zero carbon energy, which is, a great standard. I think when we looked at the last, the mining summit, what was happening across the globally, I think that we were getting close to like 59% were using, renewable energy. So this is a great number, and actually maybe this is the type of metric we should be including on the website for the mining companies, so that people can see what they're using to mine. We know that there's quite a few mining companies out there that close to 100%, and they recognise that. But there are some miners that are still using fossil fuel and paying carbon credits. So, it'd be interesting to sort of like use that as a metric, and then that gives people like a larger picture to look at. Some people might just be interested in the company making profit. Some people might be interested that these companies are doing something socially responsible, and TeraWulf are there, highlighting their position now and putting out a good report. And I had a quick look through it this morning, and I'd recommend people having a chance to put it. We may put a link in the comments so people can actually scroll down and have a look at that report themselves.
Yeah, that's a great idea, Anthony. We will put it in the comments. And for me, it's really just a great to have, right? If you've got two companies, one of them is mining in a socially responsible way and one of them maybe not, of course you're going to want to invest in the one that's doing it the right way. So kudos to TeraWulf for getting this out, for setting that standard in the Bitcoin mining industry. We've been big advocates on this channel, Anthony, for the benefits, the grid stability, the use of additional or wasted power, the carbon neutral or sustainable focus of energy generation for this industry. We've been big advocates of a lot of those positive trends, but it's reports like this that really take that a step further. And we'd love to hear your thoughts and comments in the section below, especially if you're a member of the Wulf Pack, whether you think this is something that should be continued at Wulf and kind of set as a standard in the industry, or if you're more worried about the bottom line profit as an investment. Now, Anthony, the next section here talks about leadership changes. So obviously a couple of weeks ago, I mentioned we had Ben on the program. Shortly after that, actually, I just recalled I had a conversation with Jeff, and a few days later, they then announced his leadership change would be happening. So there was a lot of controversy there, people questioning why that happened, why the timing was now. Now we've had a couple more updates at the CFO level from Soluna and SATO Technologies. And of course, we just had Asher on the program from Hut 8. And I would say that was a pretty successful example of a leadership change there at the C-suite level. Obviously, he took over for Jamie Leverton just a couple months ago. So we're starting to see a lot of jockeying around the C-suite here heading into halving. What's your take on all these leadership changes?
I personally met Jeff, and Jeff's got a finance background there. He's done an amazing job with Bitfarms. I mean, we've talked extensively about, we're talking, less than 2 years ago, $160 million of debt on the balance sheet, down to zero. And they went down to zero in a planned and managed way, and let investors know, a long time before February 2024, what was going to happen. And they met every target getting that debt down there. And, shareholders want to see that. They don't want to see, too much debt on the balance sheet. And now Bitfarms are, in a position now where they've got obviously it's a challenging growth target to get to by the end of this year, 21 exahash. They're at getting close to 7 exahash at the moment. So they've got a 200% chance to get there. But I can see Jeff, moving on to the next challenge. He's actually staying in post until they actually recruit another CEO. So he's not left the company yet. So he's still in the chair. Hopefully, I'm going to catch up with him this month at the AIM Summit in London. So, I'll get to hear more about what his plans are for the future. From Hutech's perspective, it was a very quick changeover, and Asher took the lead of the company literally as soon as the announcement came out. But we've also seen this week a couple of other changes at sort of like the CFO level. And so yesterday we had SATO Technology announce the appointment of Andrew Bond to the board of directors, and the departure of Fred Pye, who'd been in that particular role previously. And what we're seeing with these companies now is Andrew's got he's a Wall Street veteran, so these companies are going out there and getting the right caliber of people to lead their financial movement. Obviously, if you want to grow as a company, you're going to have to understand how the capital markets work, trading, research, banking, and Andrew's got all of this in his bailiwick. So he's an experienced veteran in that space, and you can see it's a great ad for SATO Technology. And then today we've seen another CFO appointment where Soluna Holdings have appointed John Tunison as their chief financial officer, and again, he brings 25 years of managing finance operation facilities capital for companies operating in the energy market. So and that includes being the CFO of Verdant Specialty Solutions, and he's got a lot of experience there. So Soluna coming onto the podcast tomorrow, so you can tell us a bit more about who's coming on this week, Bryce, if you can.
Yeah, that's right. We have John from Soluna on tomorrow, so we'll talk about earnings. Obviously, a big, exciting time for that company. Soluna's been great at really finding stranded renewable power. So as we talk about ESG and that pursuit of low carbon footprint, Soluna fits the bill perfectly. And then we've also got Rob Chang, the CEO of Griffin Mining. So Griffin is a new addition, Anthony. We were actually able to add 2 new members to the power mining analysis in Q2 here. So Core Scientific, one of the most popular and requested companies, also happens to be the biggest returning company last year. So that's an exciting one. And then Griffin Mining, just to fully round out some of those smaller miners. So 2 interviews this week. We'll likely be dropping them Thursday and Friday. And then we're going to be following that, obviously, with a number of more interviews throughout the back half of the month here. And just to close out that conversation on leadership and personnel, Anthony, it reminds me so much of sports, pro sports here, as we go into playoffs and you're approaching the trade deadline. It's important to have the right players on the right team at the right time, right? And that's exactly what you're seeing. It's so astute of you to pick up. Jeff's financial background was used to address the debt. Now, as we gear up for Wall Street ETFs, a lot of these companies are really looking for the bankers, the Wall Street experts, the hedge fund people, the people who understand big money, right? So it'll be interesting to see if we continue to hear more developments on that front. Again, no shortage of news in the media this week, Anthony. It's only Wednesday, but halving is now just a couple weeks away, and I would expect it continues to get more exciting from here. I'll throw it back to you for any closing thoughts, but we really appreciate the time today.
Yeah, I mean, we've had a great quarter of podcasts in this first quarter of the since Power Mining Analysis was formed. Some really memorable ones, and you've already articulated that. If people haven't seen the interview with TeraWulf, and Paul coming on the show there, please revisit that one there. We had a great update from Core Scientific, from Adam Sullivan, the CEO there, fully explaining, because a lot of shareholders were sort of like, didn't understand about the warrants. Watch that podcast there, because Adam clearly explains everything about the warrants and what the company's going through to grow in 2024 and how it's going to pay off that debt. Really, really interesting. If you've not seen that one, have a look at that one there. 2 other ones that stand out are certainly the Ben Gagnon podcast, where he came on and discussed about Bitfarms. I mean, if people haven't heard Ben, he's one of the sort of like go-to people in the mining space there. He'd be on everyone's books as a chief mining officer if he was looking for a role, but he's at Bitfarms, so that they've got the benefit of having him in their team. And also, we had an update from Jason Les, the CEO of Riot, explaining about some of the issues they've had at their Rockdale facilities, and looking for 2024 to be that bounce back year as the massive site at Corsicana starts to be energized, and these enormous amounts of machine orders that have been paid for start appearing at both Rockdale and Corsicana to get to their 31.5 exahash by the end of the year. So we've had some fantastic, CEOs come on there, many more as well. Sam Tabar has been on a couple of times from Bit Digital. We had a great update from Bitdeer Technologies as well. I mean, people, should realize about Bitdeer. Not just a self-mining company, they've got like 4 or 5 different business streams. And then they announced the fact that they've actually produced their own miner with an efficiency of 18.1. So that's pretty much, on par with what the S21 T21 achieves at the moment. And so, that's their first generation miner. God knows what the second or third generation miner is going to look like. But, have a look at these podcasts, because you pick up so much information. We're getting these CEOs on with regularity now. And if you're not watching them, you're falling behind a little bit, because they're coming on and explaining what's happening at the moment, what's happening in the future. They're explaining earnings results like that. So they'll give you a brief of what's happening in that company in a nice sort of 20-minute, 30-minute slot. So it's well worth looking at some of the previous podcasts and catching up on that information.
What I like so much, Anthony, is just reading the body language and the verbal expression and the tone and that kind of stuff that you can't pick up in the press releases. And you're right, you and I have been so lucky since we joined up here and partnered up. We've done 16 CEO interviews in Q1, you guys. So I think one of the go-to spots definitely on YouTube for this type of content. We're looking to launch all of our short form stuff. We've got the website being worked on currently. We're adding new members. We're looking at a newsletter. We've got merchandise available now in the section below. You've got Patreon, Anthony. So we're really looking at 2024 as a great opportunity. You guys are supporting us the whole way here. And Anthony and I are definitely going to make the most of it, do some traveling, some site tours. Anthony's got a couple speaking engagements as well. So we'll be sure to get the most content out there possible, and we appreciate all the support. You guys, if you're still watching the video, on that note, hit the like button, feel free to subscribe, and we'll see you in the next video.